For institutional investors making an allocation in the next 2 years, beyond Bitcoin, are there other cryptocurrencies that should be seriously considered?
I'll answer this briefly. Yes. I don't know which ones. I would not make that recommendation. These are like venture projects priced in real time. There's all sorts of different considerations. That's why I really think a broad portfolio, either passive, we can have discussions about that, somebody actively looking at it, long, short strategies, all of these things with active people looking at the valuations, evaluating teams, evaluating use cases. It's very early. So I am not a Bitcoin maximalist. I believe greatly in it, but this is 10 years old. We're talking about disrupting financial systems and a centralization effort that's been maybe thousands of years. So very early days, treat it like that. That's one of the upside asymmetric risk reward aspects, but very early, and be broad and consult professionals.
Yeah, just to briefly touch on this, I think infrastructure is going to evolve around Bitcoin right now first. And so, I mean, what we see is, when you look at the tail, it's a little bit more of a challenge from a custody perspective. The solutions that exist for the tail aren't necessarily there yet. The solutions that do exist for some of the larger, more tradable assets are there. So something to just keep in mind when you're evaluating infrastructure is, what are the tradable venues that I can go to? Are these venues doing KYC AML on their participants? And really, the way I'd approach it is where is this coming from versus, the ecosystem's going to evolve around the largest market cap tokens first, and that's really what we've seen so far in the space.
Yeah, we thought about this problem a lot when we were working with Bloomberg on the index, and from a construction perspective, in terms of the index, what we reflected on is no one's smart enough to know the answer to that question today. There's too many second and third order effects. What we do know is these are all networks, and networks, even when you look at things like social networks, disproportionately accrue value to the largest networks. And so what we were able to do with Bloomberg was define through exchange standards and minimum liquidity requirements a set of rules and parameters that bring in the largest, most liquid portion of the asset class. If that's 5 coins today, that's because those are 5 coins that meet those minimum thresholds. If there were 10 6 months ago, it's because 10 met those thresholds. So in that portfolio or that index today, there are 2 blockchains, 1 payments company, and Bitcoin, and then 1 Bitcoin equivalent, sized appropriately relative to the market cap weightings and the rules. We think that's a smart way to build exposures, and it's because you can't predict where these things are going to go within a certain use case, and there will be multiple verticals beyond just Bitcoin as a store of value.
And with that, thank our institutional panel.